Hello there, I hope that you're doing well. Welcome to episode 14 of the public Zeussy 2025 mentorship here on YouTube. During this lecture, I will be reviewing the index futures. Here we're on the daily chart of Nasdaq, and what we can see is that Nasdaq expanded towards the downside aggressively throughout the past few weeks. We saw the market reprice all the way from the 22,000 price level to the low 19,000s right here. Notice that this repricing lower was very aggressive and quick. What I will explain to you is why this repricing lower took place, and I will share with you my anticipations moving forward. Before I do so, I would like you to pause this lecture and would like you to try and explain for yourself why the market expanded lower as quickly as it did. I know that some of you are not a fan of pausing the lecture and thinking for yourself, but trust me, this is where the true growth is taking place. Once I explain what I see within this delivery, you can compare that to what you saw, and then you can see where you still need to improve upon. I hope that you pause the lecture because I will now add my lipstick to the chart. First of all, what I would like you to see is that when we open up for the month of February in this area, we saw the market reprice towards the upside. We saw it run higher. Notice that we saw the market take out the January high right here, but notice that we failed to utilize the January high as support on price. Instead, we saw the market reject that high. Notice that it tried multiple times to reprice higher, but eventually we saw the market displace towards the downside. From that moment in time, your eyes should immediately be drawn towards the January low. Why? Because throughout the month of February, we referred to the January high and the January low. So we purged the high, and now we were anticipating that the market would likely draw towards the January low. Why? Because that's a key time-based sell-side liquidity pool. Sell-side liquidity has been engineered below the January low right here. Notice that we saw the market expand towards the downside aggressively towards the January low, and eventually it was taken out. Notice that when the January low was taken out, we saw a CB form right here. The market retraced into that CB, and we then saw further continuation lower when the month of March opened up. Now, what I want you to pay attention to is the following. As I explained time cycles earlier on within this public mentorship, I outlined to you that there are two potential scenarios when a previous cycle low or previous cycle high gets taken out. We either see a purge and revert, like you saw taking place here, where we purged the January high, the previous month's high, and reverted towards January low, or we see continuation taking place. Continuation means the following. When continuation takes place, the order flow continues even though we have taken out the previous X low in this case. Meaning we saw the market take out the January low, and we then saw the market eventually retrace into the higher end of this down close candle right here, the January low candle. Notice that we wicked above it, but notice that the bodies kept on closing inside this range. Eventually we saw the market expand towards the downside, and we saw it retrace into the January low one more time before it truly began to expand lower aggressively, drawing towards sell-side liquidity engineered below these lows right here. Now, what I want you to pay attention to is the fact that you see both a purge and revert inside this delivery as a continuation taking place. This right here shows to you the importance of time cycles. And isn't it interesting to see how the past few weeks there has been a lot of chaos in the world which has been thrown around, and how the media has been putting out certain headlines and such that have caused so-called panic on the markets. Whilst in reality, when you look at the markets from an algorithmic perspective, you're able to see that these time cycles already told you that we were very bearish these past few weeks. That is why these past few weeks I've only been looking for shorts until we reach my higher time frame objective of this DABC right here. This DABC was my objective on the downside, and when we reached this DABC the past week, to me that was the sell program completed for the near term, and therefore from that moment in time I began looking for buying opportunities as well. And notice that this week we saw the market open and immediately expand into that higher time frame objective of that DABC, and we saw the market just consolidate inside of that DABC throughout the remainder of the week. Notice that we saw the market wick outside of that DABC's range multiple times, but notice that the bodies kept on closing inside of that price range. That means that we can utilize the lower end of this DABC for buying opportunities and the higher end of this DABC for selling opportunities. Moving forward for Nasdaq, what we will be monitoring is the reaction to this DABC right here. If we would begin to see Nasdaq this ways above this daily CB, utilized as support on price, then we might see Nasdaq gravitate towards the weekly open. I am, however, aware of the fact that we see the market be very bearish, and therefore we want to be cautious when it comes to trying to capture a falling knife, because if Nasdaq would displace below this daily BC, utilized as resistance price, then to me, sales liquidity pool objectives below market price come to mind as a draw liquidity. But for now, I'm keeping a neutral stance until I see what direction the market is heading to next. If we would see that displacement higher, and if I would begin to see the signs of a buy program stepping in, then this weekly open will be a potential draw liquidity, and we might see a retracement taking place into the range which got established. The only argument that I can make against that thesis is the following. Notice how throughout this repricing lower, there has been a lot of back and forth going already. That shows to you that there has been efficient delivery, where every single price range has been balanced out, and it shows to you that this whole run lower was textbook algorithmic order flow, where you can see that every single price range was balanced out before the market expanded towards the next objectives. Here on the hourly chart of Nasdaq, notice that on this hourly chart, what you can see is that when we opened up for the week, we saw the market immediately begin to expand towards the downside. Notice that on Monday we had a very large range day, and this is important to note because on Monday there was no news at all. Therefore, to see such a large range be established on a no news Monday immediately signals to you, alright, what follows after a large range? Large ranges turn into small ranges, especially when higher time frame objectives get reached. In this case, the price range of the daily BC, this blue shaded box. Therefore, for the whole week, my anticipation was that it would likely go back and forth inside of this range until we would begin to see the market utilize that range as either support or resistance on price. Meaning, towards the lower end of that BC, you can see that buying opportunities presented itself. Towards the higher end of that daily BC, you can see that shorting opportunities presented itself. And that's a key insight which I want to share with you. Now, when we pay attention to what occurred on Wednesday in particular, notice that on Wednesday, we saw the market reprice above the Tuesday high, this high right here. So we took out buy side liquidity resting above this high. By taking out buy side liquidity resting above this high, we saw the market also trade into the price range of the daily CB, which is annotated by this red shaded box. Notice that the CPI release was also Wednesday. Specifically, CPI was released right here. When you pay attention to how the CPI release was utilized, you can see that the CPI release was utilized to reprice into the previous week's low right here. Notice that the market just stepped above the previous week's low before rejecting it. Look, what I want you to understand is that when you pay attention to this delivery right here, you can see that the importance of these very specific previous cycle highs and lows, in this case weekly highs and lows, are crucial. And therefore you must monitor the reaction to them in order to gauge the order flow. As long as price does not displace above this previous week's low, I anticipate that we're going to see further repricing lower on the higher time frames. The moment that we would begin to see Nasdaq displace above the previous week's low, and specifically these two imbalances right here, utilize them as support and price, from that moment in time I would be looking for buying opportunities in the form of a buy program. Is that ambiguous? Is it hard to note what levels I'm monitoring or what range I'm monitoring? No, it's very straightforward. If this, then that. Keep in mind that the previous week's low is the most important price level, meaning this candle's low and specifically the daily CB are the most important to monitor moving forward. When we pay attention to the daily chart of the yes then, what you can see is that on the yes, the exact same profile was in play, where I can see that ES opened up for the month of February and the market initially ran towards the upside, taking out the January high. Notice that we just wicked above the January high right here before the market rolled over, drawing towards the January low. Notice that when we opened up for the month of March, we saw the market open high and we saw it immediately begin to expand towards the downside. Notice that the market took out the January low. This is a purge and revert of the January high to January low complete. At this moment in time, what I was monitoring was whether or not we would see continuation taking place. What you can see is that I've also annotated this daily BC right here. Notice that we saw the market retrace into that daily BC. I'm treating that daily BC as an inversion of a value gap. Notice that this lines up with this upclose candle, which represents the January low. Notice that we saw the market find resistance inside of these ranges before it eventually expanded towards the downside, drawing towards my higher time frame objectives. My higher time frame objectives were these imbalances right here. The reason why is because what you can see is that above these imbalances, a lot of sales liquidity was engineered. Below these relative weak lows, for example, sales liquidity was engineered. When you apply time to these lows as well, you begin to understand that these were the previous quarter lows, and therefore you must note that underneath these lows, a lot of sell side is resting. We saw the market reprice below these daily imbalances, and notice that we saw the market eventually retrace into a newly created CB. Notice that the CB lines up with the previous week's low, which is right here. As long as ES does not displace above this CB, and we utilize that as resistance on price, I anticipate further continuation lower. That means that sales liquidity objectives to monitor are this week's low and the sales liquidity resting below this low. If ES would displace above this CB and displace above these imbalances, meaning it would utilize this range as support on price, from that moment in time, I'll be considering whether or not we are in a buy program and whether or not the underlying order flow has changed. For now, I'm leaning lower until proof otherwise, but keep in mind that because higher time frame objectives have been met, we must keep in mind that at one moment in time, the underlying order flow will change. When it occurs, we must be ready to have potential buying opportunities as well. When we pay attention to the RE chart of ES10, what you can see is that on Monday, the market expanded lower aggressively as well. Notice that after this large range which got established, we saw the market just consolidate for the remainder of the week. Inside this consolidation range, where you can see that there's a lot of back and forth going, you can see that the market provided multiple opportunities on both the downside to buy as on the upside to sell. It's inside of this environment that you must understand that your buyers must be fluent. You must be nimble when it comes to holding on to one-side ideas. Therefore, throughout the past few weeks, I've been only looking for shorts, but throughout this week, I've been looking for both longs as shorts. And that shows you as well that you must understand in what environment you're currently trading. Are you trading in a trending market or are you trading in a consolidating market? Both environments require different approaches. Now, when you pay attention to the previous week's low, which was right here, notice that we repriced through that low on Monday, and notice that we then retraced into it. We saw the market find resistance there and then it expanded lower again. Notice that we eventually saw the market get back towards the previous week's low with that CPR release on Wednesday. Isn't it beautiful to see the market be repriced into such a specific low before it eventually rejects that? It's almost as if a lot of sellers are stepping in at this price level, right? Well, if you're studying actively what I've been teaching you publicly within this mentorship, you know that buying and selling pressure is a myth and it's not the reason why price goes up or down. With that being said, this lecture comes to an end. I hope that you found it insightful and I hope that my game plan for the upcoming week is clear to you. I want to wish you good luck the upcoming week and I look forward to speaking to you in the next lecture. Be safe.